Hello, everyone. Good afternoon. Thank you so much for being with us today. My name is Maggie Lake. I am going to be your moderator and guide you through this next session, which is Fintech Innovators, Drivers of Inclusive Economies. We're going to have a great discussion. If you could, please take a moment and silence your phones. That would be terrific. And that is really at the heart of what we are going to be talking about today. We have this amazing technology that has spurred all this innovation in the financial sector, and it's transforming financial services. So over the next hour, we are going to discuss how fintech can become a key channel for financial access and enabler of the digital economy. In a few minutes, we are going to welcome our panel on stage, but first, we will get introductory remarks from the IFC CEO, Philippe Leroux. Welcome him to the stage.
Thank you very much, and good afternoon, and welcome to everybody on this IFC panel on FinTech. 12 months ago, at our annual meetings in Bali, the World Bank Group and the IMF launched what we call the Bali FinTech Agenda. This agenda helped countries harness the benefits of financial technology in providing financial services while also managing risks. Bringing the unbanked into the formal financial system is a goal of the World Bank Group Universal Financial Access Initiative that was launched in 2015. And this initiative aims to enable 1 billion people to have access to a transaction account by 2020. The good news is that we are on our way to reach this goal with 721 million newly banked adults as of the end of 2018. Today we are honored to have an outstanding group of industry participants, including innovators and regulators. Our panelists will provide a unique window into how technological innovation is improving access to financial services and promoting financial inclusion in developing countries. An estimated 1.7 billion adults worldwide, or about 1/3 of all adults, do not have a financial transaction account. Of those unbanked, the limited funds is quoted the most often as a reason. In plain English, that means that financial services aren't yet affordable for the poor. So the first, and in my view, a major way fintech is helping is by bringing down the cost of financial services. New tools developed from technological innovations, such as cloud-based services, are transforming the way financial services operate. They are making processes faster and more efficient, and thereby lowering the cost of operation. Fintech innovations are also reducing physical barriers to financial services. One of the best-known examples is the famous M-Pesa, which started in Kenya 12 years ago. It was a simple way to send payments via mobile phone. Now, mobile money is helping to deliver financial inclusion across the whole country. Bringing financial services to where people live and work are providing greater financial inclusion for women, who in some countries face cultural distance and safety impediments in visiting bank branches. Fintech innovations are also reducing documentation barriers. Around 1 billion poor worldwide, half of whom reside in sub-Saharan Africa, lack any form of government-recognized identification. Recording and storing ID-related documents like birth certificates on government servers support the opening of transaction accounts. Fintech can also be used to store know your customer information digitally, making it easier to authenticate transactions. In India, a biometric-based digital ID system has provided digital access to over 1.2 billion people. This is a foundation of the India Stack, a set of applications that allow governments, business, and developers to interact with one another on a paperless and cashless basis. Finally, Fintech is helping excluded population demonstrate their creditworthiness. As Fintech companies gather more data about the transactions and payment behavior of online users, they can predict consumer behavior and assess repayment risks. We have also a Fintech company in Brazil uses this type of data analysis to understand its users' income and expenses. From it, it generates a financial wellness score and offers its users pre-selected financial products from banks and other Fintech companies. Fintech is opening the world of financial services to hundreds of millions of the unbanked. Yet, financial technology is not risk-free. An effective regulatory environment is critical for Fintech to grow. Data-driven business models are particularly challenging for regulators, with important implications for data protection and privacy, data offshoring, and competition policies. Financial service providers also need to build robust interface and back-office systems to ensure customer data is protected and to minimize the risk of fraudulent digital transaction. Lastly, unequal access to technology limits the potential of Fintech and increases the digital divide. A lack of access to smartphones, affordable data plans, and financial literacy all disproportionately disadvantage the poor and women. Moreover, to grow a digital economy where Fintech can thrive, infrastructure such as fixed broadband, mobile telecommunication, data centers, and even electricity 24/7 at financially sustainable rates is required. Now, ladies and gentlemen, Fintech is a disruptive technology that is delivering stronger financial inclusion, sustained growth, and shared prosperity across the developing world. Its adoption is a priority for the World Bank Group and for me personally. I look forward to hearing next from our panelists who are leaders in Fintech innovation, delivery, and regulation. Thank you very much for your attention.
All right. If we could have our panelists come up now, please, and we'll introduce them. You can find your seat next to your name tag. First of all, we have Mr. Benjamin Diokno, Governor of the Central Bank of the Philippines. Mr. Ashraf Sabri, CEO of Egyptian digital payments company Fowry. Ms. Monica Brand Engel, co-founding partner of Quona Capital. And Mr. Andrew Torre, Visa's president of Central and Eastern Europe, Middle East, and Africa. Thank you all so much for being with us today. I'm going to move the furniture and scoot my chair a little so I can see all of you better. I thought it would be helpful for our audience if we start by describing what each of you and your companies are doing in this space, because you do have quite different roles, and I think that's really important for the conversation. And Ashraf, if we could begin with you. You just went public.
Yes.
I think it might be on already.
It's on? Yeah.
So bring us up to date.
Well, I mean, it was a journey that started 2010, and we were just public in this August. Just to give you a little bit of what we are doing, we enabled many of the unbanked people to pay their bills through agent networks. And just to give you an imagination, I mean, if you have, in a country like Egypt, you might have, I don't know, 13,000 ATMs, 15,000 ATMs, and probably 5,000 branches of banks. We have 120,000 agents at every place in the country. Meanwhile, we have also helped, actually, because we have worked together with banks where we discovered that transaction accounts in banks are not used. People are taking the card, cashing out from the ATM, and then things go as if it was unbanked. So we enabled 33 banks, either through mobile wallets or through internet banking or ATMs, again, to do the same payments. Currently, where we are, I mean, we have around 23 million Egyptians using our network. We are processing almost around 2.7 million transactions a day. And we are shifting focus more towards enabling medium and small businesses for acceptance and digital lending and payment to their suppliers to complete the ecosystem.
Monica, you have a different perspective coming from the investment side. What stands out for you?
So Quona Capital is a venture firm focused on fintech for inclusion in emerging markets. And as a venture firm, we are supporting companies very similar to Fowry. We are looking for disruptive, technology-enabled companies that are radically improving access and quality of financial services to the underbanked. And so as that, we are both looking at themes that we have seen in developed markets that we think have great applicability in emerging markets, but as frequently, we're seeing very interesting innovations. Philippe talked about M-Pesa, mobile banking is more an emerging market phenomenon than a developed market phenomenon, as is agent banking, which is another sort of theme we like a lot. And we use the fact that we are what I describe a multi-local fund. So we're in 3 regions. We're in Latin America, Sub-Saharan Africa, and South Asia. We use that presence to cross-fertilize and share lessons learned about what we think is really working and what will radically help reduce the number of underserved.
Andrew, you're in a, of course, very different position. We're talking about small, nimble players, Visa, well-known, well-established. What are you doing in this space, and especially when it comes to the inclusive impact?
Sure. First of all, I wanted to thank the IFC and Philippe for hosting us today. I am having a moment of nostalgia here. I started my career with the IFC 20 years ago, and the last time I was here, a team and I received an award from President Wolfenson. So it was about 20 years ago. So it's just great to be back, and thank you for hosting us. So we are a more established player. We've been around for a fair bit of time, and when we first of all, our mission is to connect the world through the world's most secure, reliable, and safe payment system. And when we think about how we do that in order to enable consumers, individuals, businesses, and economies to thrive. So our entire business model is actually predicated on access and inclusion. And without that, things don't work as well. And I'll go back to what Philippe said. There's a lot of work to be done. There are 1.7 billion individuals, consumers that don't have access. And on the seller side of the equation, you have tens of millions of smaller sellers that also don't have access. So we spend a lot of time thinking about how we can expand access much more actively. And we've traditionally worked with financial institutions, and we've realized that they're still great. We're still working with them. They play a very, very important role, but we need to expand the ecosystem. So we've been engaging with non-traditional partners and fintechs really to drive that access both on the consumer and seller side. And Ashraf's company is a really good example of someone who's been able to do that, to drive and expand access, create greater utility, and so we've been pretty active in that space.
Governor, I think we can all understand why it's so important to expand access, but as Philippe said, fintech comes with risks, especially when you start moving rapidly. How, as a regulator, are you responding to the challenges set out in the Bali agenda while at the same time managing those risks?
I'd like to thank you also for having me here. I guess I'm here because you want to get the fintech from the perspective of a regulator. I'm new on the job, 7 months to be exact, and my personal mission is to bring the central bank closer to the people. And I see fintech as an instrument for financial inclusion, and therefore we embrace technological innovations, but as you mentioned earlier, we have to caution also that it has to be a risk. We have to manage the risk so that we can protect the consumers also from that point of view. So we have to look for the right balance between adapting innovations and managing risk.
It's not an easy balance. Andrew, let's talk a little bit about that. Where are we from the regulatory point of view? What's working, what's helping, and where do you see the challenge?
Sure. So I spend a fair bit of time traveling around markets and talking to ministers of finance, central bank governors. And what's amazing is, I'll be glass half full for a moment, is there's a real consensus around financial inclusion and digitizing economies. And that's started over the last couple of years. And then you have central banks and governments with very pronounced platforms with agendas and goals and objectives, so that's great. And there's a lot of progress being made, fostered by really smart government policies. I'll say when we travel around, I think there are generally 3 things we see, and I will say you've got one of the most difficult jobs out there. I can completely empathize. So if you think about it, from one hand, central banks are tasked with maintaining financial stability, but they also have these objectives and need to foster innovation. So it's a really tight balance you walk. And I think there are 3 things we're seeing out there. The first is a little more regulatory clarity on some of the new fintech players. So you've seen folks do e-money licenses, payment banks that allow players to get out there established with some regulatory clarity. We've also seen some nice sandboxes to allow people to get up quickly and play. The second area we're seeing is there's a strong push towards digital economies, yet I don't think always all of the incentives are aligned. So, I think because you're really changing culture and behavior, and you need to create the right economic incentives. So, a few things come to mind. Incentives for small merchants to come on board and move out of the shadow economy and remove cash to start accepting digital payments. And also there tends to be some encumbrances around bringing in new technology. So there tend to be sometimes tariffs on goods that are going to come in and digitize the economy. And then the last thing we think about is competition access level playing fields. And we see 2 things. I think we see a trend in some extent to more mandated domestic switches. I think domestic switches are great. I think if you think about fintechs in general, though, they want to be able to use the latest innovation available. They want to work with multiple partners, whether it's a domestic switch, an international switch. So I think it's good to be able to allow competition to sort things out. And I think the other thing we see is data policies. I was just at a meeting with a number of financial institutions, and they were talking about the problems with data in the cloud. The World Bank itself, in its 2020 development report, talked about data localization, and actually I think it contributes to about a 4.5% reduction in productivity. And you see a lot of fintechs moving data into the cloud so they're quick and scalable. I think data security is incredibly important, but that shouldn't be confused with data localization.
I mean, it's always the struggle, Governor, if you don't move fast enough, people are upset, and then when things go wrong, people blame you. So we feel for the regulators who are trying to walk that line. Ashraf, your success is going to be predicated on the fact that you can be nimble, that you can move quickly. What do you need to facilitate that, not only from a regulatory point of view, but from a partner point of view?
I think we managed, to build a good relationship with the banks in Egypt. So, I mean, we are really an extension to the banks to do what the banks cannot do effectively. The only thing that worries me a little bit is that the new generations in 15 years, if we look just in 15 years, if we keep offering the same products and the financial services the way we offer, maybe the clients will not be ready to accept that. So I cannot imagine that somebody, I mean, looking into Egypt and the demographics of Egypt, where 70% are youth. In 10 years, I cannot imagine this guy or this young lady is going to a bank branch. I cannot imagine that they are accepting the same ways that we are dealing with. So the pace of change and the pace of understanding that our customers will change is an important consideration while making the regulations. Otherwise, probably we might face informal financial services because people does not wait. They find ways to fulfill their needs. So if we are not really on top of that, we are missing something that can cause probably something that is more dangerous in the future.
Yeah, it's an excellent point to make, and I think Ashraf and I had the pleasure of being in a morning session together, and someone brought up the point that more than a third of the people in the world were born after Facebook, Amazon. They are digital first, so there's some disagreement about how quickly we can all move on this and what they will ultimately demand in terms of speed. Monica, you work with so many different countries, players in different countries. What are you seeing from the landscape in terms of what works? I mean, Andrew mentioned Sandbox. I'm not sure if everyone here understands what that is, but what are some of the models that you see that are enabling protection, keeping quality in mind, but also moving at a speed which is going to help this innovation?
Yeah, so I'd say a few things. One is I think I concur with some of the prior comments on really understanding this from an ecosystem point of view. So I think there is a role for regulated banks or traditional players as well as for startups. And I think the best solutions or the best outcomes happen when people really know what they're good at. So I think a little bit of humility on, I think some of the bad outcomes, and we'll speak about that, and there are some examples of, I think, sort of regulatory regimes where they tried, for example, to make bank and telecommunications companies work together. And that's like oil and water, right? So I think understanding that, okay, telecoms are really good at sort of last mile distribution, customer centricity, agility, whereas banks are really good fiduciaries, good sort of management of treasury functions, and really understanding kind of what we say in the United States, horses for courses, where have each entity do what they're really good at. On the innovation side, we encourage, so you'll, for example, if you go to Quona's website, you will never see a statement like banks are dinosaurs or, viva la revolution. We are very much a believer in that successful outcomes will marry both the legacy systems and the new systems. And so, as an example, we look at alternative lenders. Let's use that as an example. We have a couple digital lenders. In fact, one that an investment we just made with the IFC. Very similar. We see themes. They're small business lenders. We have one in Mexico called Confio, which SoftBank just invested in. We have another one in Brazil called Biz Capital, a newest investment called Lulalend. And all of them, what they do is they digitize previously paper and people-intensive models. So to acquire clients, like you said, many clients, many customers have a digital footprint. They'll use their cell phone. They can be geolocated. So it's much more cost-effective to acquire them and identify them, and now even underwrite them using their data, using these technology means. However, to fund their balance sheet, like they're growing quickly. So they can try to raise their own funds, or they can work with banks who are excellent fiduciaries of monies, who have lower cost of capital. So it's a great example of where each player is doing what they're really well suited at. And I think those are the kinds of environments, and I think the best regulatory systems allow that kind of flexibility. So allow, for example, to open a bank account, for example, one of the, clarity you mentioned in terms of regulatory regimes, eKYC, really being able to, recognize that, and I think Philippines has done a phenomenal job understanding that in this digital age, the way we identify who's who and validate might be different than we did historically.
Governor, is that something you're looking at, and where are you
Yes,
on that
indeed.
progress?
We're looking at that. In fact, a significant structural reform that we have adopted right now is there's a law which requires us to have a national ID system so that each of the 105 Filipinos will have an identity, and that will facilitate the opening of an account with the banks, just like what they did in India. And so to me, if that is completed, which we hope will be completed in 2 years, that will accelerate. In fact, there will be a quantum jump in the number of people who will be covered by the banking industry. At this point, let me explain the bank's approach in promoting responsible innovation in a sustainable manner. The first is to promote a risk-based, proportionate, and fair regulations. This means to ensure that beneficial innovations are not hampered by unwarranted and excessive compliance requirements. Our test and learn approach, which is the regulatory sandbox, has allowed us to accommodate pioneering solutions and technologies in a contained setting. The second is to maintain active multi-stakeholder collaboration, because recognizing the multiplicity of players and multi-layered relationships among fintech firms, banks, and non-banks financial sector players necessitate continuing collaboration with these players and strengthened interagency cooperation with both local and foreign counterpart regulators. And of course, the third is to ensure consumer protection. Regulations must ensure that the design and deployment of digital financial solutions espouse transparency, product suitability, security, and confidentiality of information to ultimately protect consumers, especially the most vulnerable ones. So that's the framework of our regulation.
Is that framework, Ashraf, is that framework applicable? Is that something, an example, because it seems to be working well and they are on the front foot, can you apply that in a different market, or are there other challenges, say in Egypt, where that may not be as easy?
These models, I mean, where you can really evaluate risks based on usage or wisdom profiles and all the stuff, and opening systems, sandboxes and all the stuff helps a lot. But I think we have to think about the future a little bit differently. It is not only a central bank role. I think opening systems and enabling access to data would fuel the system. Let me give you some examples. If you are an FMCG company, for example, and I am a lender to a small grocery, if there is a way whereby we can open information, not necessarily deep information, but I want to know, I mean, the amount of business that have been done between this small grocery and your company. How long have he been working with you? This can digitally make a huge difference. If you can open up government systems where they have data, and you need to make this securely. Nobody is saying open data without security, but put the right measures to provide the information. So ID systems, jobs, there are many things that are available information that if the platforms can interact together, they can create magnificent value. We understand the fears, we understand that it is not easy, but somebody has to think on having this really working together.
Andrew, you mentioned culture change before. There is a lot of discussion in this space about access versus usage. Even if you are able to penetrate and get people, do they use it in the way that they need to? And how do you get them to give up a culture of cash? And that's difficult.
It is.
How are we going to do it?
You know, it's difficult. However, when you offer consumers and sellers a better solution, they will gravitate to it. And you know, I think there's a couple of things that examples that come to mind and things that companies are doing. I mean, Monica is on the edge of what I think's starting to happen now, which is you're seeing a lot of investment pour into the space. In 2013, it's a little more crowded now, isn't it, Monica? In 2013, there's about $3.2 billion of VC funds invested in fintech. In 2018, it was $40 billion. Cumulatively over that 5-year period, there was 100. If you look at 2018 and then you layer in private equity investment and M&A, it's $100 billion. So the fintechs today are incredibly well capitalized, one, and they're generally following a similar formula. So the first thing they typically do is they build cloud-based platforms, right? So they're quick, they're easy, they're scalable, you can go multinational expansion. The second thing they do, to get to your point around consumer adoption, is they have a digital acquisition strategy. Not only is it digital first, it's often digital only, because that's what consumers or sellers want. And again, that lowers costs and extends reach. The third thing they do is they really focus on user experiences, better interface, real practical solutions to make people's lives better. And then the last thing they're doing is AI or machine learning with the data, and they'll start with one use case, and then they'll expand to other use cases. One example, which is pretty prevalent, is Gojek, started in Indonesia as a taxi ride hailing. The problem they had was there wasn't enough penetration on electronic payments, so they had to figure out, how do I convert cash for rides? So they created GoPay. And then when they had GoPay, then they started to expand into other service lines. So they became an e-commerce platform. They went to bill payments, utilities. Now you have them at point of sale, home delivery. So this is a pretty logical step for a number of these players to do, and it's all based on trust and usage and utility that consumers and sellers like.
I see everyone nodding. Monica first, then Ashraf. Monica?
Just a couple comments. I completely agree on this notion that by superior quality will, I think, attract folks. But I want to also caution the whole build the mousetrap and they will come. We actually, if you go to our offices, you'll see on one of our walls it says tech and touch, and interspersed between those signs that say tech and touch, there are weavings from each of our markets. And it's a reminder to us that a lot of our clients need to be helped on that journey. So, and actually, I think, example, we have two, sort of, I would say, kind of brick and mortar examples like Fowry that are kind of agent banking, where you are going to their community, you might be mobile enabled, and you're facilitating that merchant or that agent with technology, but it's a person in the community. And I think that's really important to help that. And I love the example of Gojek, actually, and I should thank it because the company that was acquired by Gojek was a portfolio company of ours named Coins.ph, which was because of the Philippine, I think the very thoughtful regulatory regime they set up, was allowed to be created. And what's interesting about Coins, so Coins is a payment system that integrates and makes interoperable very fragmented, sort of siloed payments. So if you were a Filipino before Coins, you would have to do one set of transactions to pay your bills, go to an entire different provider to send a money transfer, and go to a different set of providers to top up your phone. So not only do you have like a Fowry, which is sort of a one-stop shop to do that, what Coins did was build an interoperable platform, and to Andrew's point, a seamless user interface so that a consumer could literally open up their phone and do all of these transactions. But what was really brilliant, and I think why Gojek acquired them, was they recognized that we can't leave the legacy institutions aside, nor can we ignore that people have habits. So maybe while I go buy my milk, I also send my money transfer. So actually, it might not be a negative to actually walk to this physical place. So they actually built in cash in, cash out agreements with all the old places that people used to use to fulfill this transaction. So this brilliance of actually bringing technology to take the friction out of the system while recognizing and meeting the customer where they were in terms of their habits, and building a win-in for the old institutions that actually still have a role to play in the Philippine economy. So I think it's an example of that it's a nuanced journey that we're on.
I'm so glad you brought that up, and it is a fantastic example. Governor, I'll go to you in just a moment, but Ashraf, I think you're on the grounds seeing this.
Yeah, I think, the first thing is that we have to realize that cash is a very tough competitor. And
well, it's worked so well for so long.
Yeah, it is the most known brand in any country. It settles immediately. There are no chargebacks. Maybe there's no taxes. Maybe you use cash to pay for your other things that you do. So the idea that the cost of cash to governments and to central banks and to banks is high does not mean by any means that small merchants would really, appreciate that cash cost. And to them, cash is very good. So unless the value proposition, number one, who make the cost saving pays for it. Okay, so the merchant, if he does not make a cost saving because of using cash, he's not willing to save for it. Number two, I believe that thinking more about growing the business of the merchant, and this is to me real financial inclusion. Payment is only one aspect. And payment does not grow the business necessarily. Lending comes in place. Connecting him to his suppliers comes in place. Making him insurance comes in place. And the only way, if we really think, that we have made 750 million transaction accounts during the last 3 years, and those was for the unbanked, we have to think that those people used to work with small merchants and small enterprises. They are not the ones who were banked before. So if you want the transaction account to go into cycles, then we have to think of those small enterprises and those small merchants and how to create value to them. And we pay the price, not the merchant to pay the price.
That is a critical point. Governor, I want to ask you, for this development, for all that opportunity, how are you viewing the traditional banks? Is this an opportunity for them when it works right, or is there risk, and how are you considering the risk to the traditional financial system and the stability that comes with that?
Well, I believe that fintech can improve consumer welfare. So I'd like to see the day when we'll be cash light rather than cash heavy right now. A few years ago, we estimated that the 1% of all financial transactions was electronic-based, online. But now it's about, our desire is by the end of the next year, 2020, about 20% of all transactions will be online or electronic. And within 5 years, maybe about 50% will be electronic. So now you can do small purchases, you can ride jeepneys, buses, subways, trains using your QR code, okay? That's the vision, okay? You can buy small stuff using QR code, just like in China and India, right? So that's my vision. I'm not wedded to the old central bank concept where you operate on cash, right? I want to see a cash-light society rather than a cash-heavy society.
Andrew, whenever we have a conversation about moving to that cashless society, a lot of people bring up the Chinese models that have been so successful, but then in the next breath also say it's a model that's particular to their society, and can that be replicated elsewhere? And the move to digital really didn't come because they wanted to pay digitally. It came because they were introduced to e-commerce. They were living other parts of their life in that world. How is Visa looking at that scenario?
Yeah, it's a really good question. Actually, I think one of the reasons why China has been so successful is something we often overlook but was talked about today. I mean, the first side is certainly a really good consumer experience, but they were really able to penetrate the long tail of merchants and sellers. And if you look around at a lot of markets around the globe, there are still far too many sellers that are not included. So they got that right. They got it right basically on closed-loop systems, though. So the governor just talked about QR code. And we think it's incredibly important to not compete on acceptance. Acceptance should be open for everyone. A merchant should be able to accept all forms of payments. So we think standards are really important there. To be able to have, whether it's QR code or NFC, because that's really what merchants want. They want to be able to accept all different forms of payments out there. So I think that's certainly one of the things that we've seen.
Does there have to be more convergence on standards?
Well, I think we're starting to see there are standards bodies. There's EMVCO. We certainly have a real perspective on that. In fact, we saw multiple different QR code standards out there, and we got together with some others in EMVCO and said there should be one standard. The last thing you want from a consumer perspective is to go up to a merchant with 8 different QR codes, and the consumer has no idea what to scan. And by the way, the merchant's business is not plastering QR codes or trying to, hopefully project from a screen multiple QR codes and say scan which one. That's not their business, right? They want to be paid simply and easily. So I think standards play a real important role in this.
Monica, when you are looking at this from an investment perspective, I meant to ask before, but where does the quality conversation come into this? There's a lot more money, as Andrew pointed out, rushing into this space. I think everyone sees the opportunity, but where do we need to think about quality of business models? What are you looking at when you're looking at where you want to be investing?
So we think about quality in 2 ways. One is how do we go beyond just number of people that are part of the formal financial services. We don't say banked anymore, that they have a functioning transaction account, and think about what is the breadth of product offering that they can do on that transaction account? How affordable, what fees are there on that account? How convenient is it? Is it accessible? Is it usable in a closed loop system or open loop? So we think about kind of the vision of actually having frictionless, high quality payments that a consumer can satisfy the variety of its needs, whether it's taking out a loan, paying a bill, saving for a future. So breadth, product breadth, affordability, ease of access, convenience. But another thing on the standards, because I do think this is a very important point. We are, it's interesting you brought up Gojek, because that's another closed loop system. So Gojek acquired Coins because they wanted a way not only to be able to ride hail and deliver your food, but to do everything. They don't want you to leave the Gojek platform. And that's a little scary, right? I think about how much of my life today is on Amazon. Now that it owns Whole Foods, there's very little that I don't do that's frightening, that a corporate entity has more touch points than a government entity. So I do think we have to think about, and that's why, for example, we invested in Yoko. Yoko is a mobile point of sale in South Africa that actually Visa worked with, so does MasterCard. But what it does is it recognizes that in Africa, you do have multiple closed-loop systems because everyone's trying to compete with M-Pesa. So now Orange has a digital wallet. Every mobile network operator has their own digital wallet. So you have multiple digital wallets, and literally is what's happening, what Andrew said, people keep different SIM cards in their phone, in their wallet, so that they can either connect based on where they are or use the wallet that has money in it or that the merchant accepts. So what Yoko does is uses the mobile point of sale to basically allow the merchant to accept any transaction, any digital transaction. It doesn't care whether you're using M-Pesa or Vodafone or Visa or MasterCard for that matter. What it wants is digital payments. So it tracks in terms of quality, it counts how many of its merchants didn't accept digital before. So the idea of going from cash to digital is one measure of quality. They count response time, so how quickly from when a person is given the mobile point of sale to when they're active and earning money. I totally agree with what Ashraf said, that if the merchant's not succeeding, this all falls down. So I think there's multiple ways we try to measure not only the number of merchants and number of transactions, which are the access metrics, but how are they thriving and using these technology tools to improve their business. That's the quality.
Ashraf, you want to jump in on that?
Yeah, just a small comment, about the role of fintech. I don't believe that fintech have technologies that big banks does not have, okay? Big banks are more resourceful, and have access to technology the way you'd like. We have to look at fintechs as creating different business models. And this is the key. The key is not the use of technology. Banks are from the first organizations that have adopted technology, okay? But it is the legacy, the people, the business models, the contribution of the profit to the entire organization. This is really what makes things different. It is not only the adoption of technology, because I cannot see why banks cannot adopt technology. I mean, they are more resourceful and they can. So what really comes in place, and we can look even in the developed world. I mean, when Venmo came in place, Venmo came in place. Everybody is using Venmo. Venmo became the verb of transferring money, and it came from nowhere. So it is changing the business model, not only adopting new technologies. And I think what we really need to think is how to make a marriage between the legacy and the new business models and have them work together to reach the people more effectively.
Governor, what would you like to see happen on that? What do you need from the marketplace to make your job easier?
I'll tell you what the governors of the ASEAN region are thinking about. We are thinking about an efficient payment system that is interoperable within the region. And you're talking of 650 million people. You're talking of a QR code that operates in Manila, in Bangkok, in Singapore. And so we're moving in that direction right now. So this is a fintech that transcends borders and to redound to the interests and welfare of the consumers in the region. Okay.
Andrew, that sounds, I'm hearing legacy, working with innovators. The skeptic in me says everybody wants to make money. Can that all happen? How is that going to happen? Are we going to see closed loops and proprietary systems and people wanting to trap them in their ecosystem? Because ultimately that won't get to where we want to get on the inclusive goal.
Yeah, so I think a lot of payment systems or these platforms started closed loop and they've opened. So Gojek, actually, we've done a partnership with them. They are opening up now. Paytm, same thing in India, because they've realized, as I was talking about, you can't scale globally. You can't even scale locally without opening up. The MNOs are starting to open up mobile wallets. So, we're starting to see that. In fact, if you don't, it means someone else is going to go work with and acquire that merchant, and they may take them and they'll ultimately provide a seamless solution. So if you're a provider, and we work with some, we've got a partnership and an investment in a company called Paystack in Nigeria, and there are a bunch of smart people that figured out that commerce was changing and they needed to support all forms of payment. And they started bringing up lots of smaller sellers and merchants, first digitally, and now they're starting to become physical world to be able to support all forms of payment. They will accept all forms of payment. So I think that's where the world's moving, both locally and globally, and I think it's a really important phenomenon. The other thing I do want to touch on is also the nexus between lending and payments. We've talked about alternative credit providers, and we actually did a commercial partnership and investment with a company the IFC did, Branch, and they're an alternative app-based lender. Unsecured loans, smaller amounts, and so they've gotten in, and what they want to do is you have the problem of I have to disperse the funds. So how do I disperse the funds? How do I collect the funds? So credit leads to payment. Payment also leads to credit. They're kind of mutually reinforcing, so they're pretty important.
Monica, we, just by nature of the group and I think the focus and where there's a lot of movement, are spending a lot of time talking about payments. But the ultimate goal is to use fintech to open up many different areas of financial services, and along with that comes, of course, financial literacy and education. What are you seeing there? Have you made investments in that space? Who's a good example to point out of what we can look to in terms of leadership?
Yeah, so payments is an important vertical, but one of multiple verticals that we look at in fintech. Another huge one is alternative lending, and it's important to mention, and I think it picks up on some comments before about when I say lending, I mean both small business lending. So actually, lenders that actually are intentionally targeting SMEs, again, like the Confios or Lululend, Biz Capital, or a Neo Growth, which uses merchant cash advance. So the idea of even when you have the digital acceptance, so you have a merchant that has figured out a way to make accepting a digital card economical, which is usually the challenge. For small businesses, the value proposition of a card isn't always compelling enough to switch. But when that does happen, you have another problem. So what happens is I might accept a credit card, but my supplier only works in cash. So how do I restock my shelves? So merchant cash advance is a way to lend against the credit card receivable, so you can stock your shelves. So when I say small business lending, there are a bunch of varieties. We have value chain or supply chain finance. So in SME lending, I think there's a really rich type of model of innovations that are targeting different types of small businesses. On the consumer side, we actually have not done much consumer lending. One of the exception is an asset-based lender in Brazil called Creditas. It actually is doing home equity finance or auto equity lending. So you think about, again, just Brazil, which is in Latin America, one of the most sophisticated economies. Before Creditas, 4 years ago, the way an emerging middle-class consumer would finance their child's college education was taking out triple-digit credit card loans. Unless they were very elite, if they were in the A class, they could access a bank loan, but otherwise, and they would own their property outright. So you had folks that even though they had equity to borrow against, there was that product, home equity loans didn't exist. So Creditas, and that's another investment that SoftBank just backed actually a couple weeks ago. So lending, payments, InsurTech is a very exciting space. I would say InsurTech is where sort of alternative lending was 5 years ago. So see a ton of innovation there. We have a company in South Africa that targets people with terminal diseases like HIV/AIDS or diabetes. We have another insurance company actually right now in India that we're working on. The last two things you mentioned, personal financial management. So you think of Betterment or Acorn, which are services here in the US. They help consumers figure out what kind of financial services are most appropriate for them. So a company in India called Fisdom is basically trying to help, again, the emerging middle class understand what type of financial services are appropriate and linking them with those providers. So again, not trying to replace those legacy institutions, just making sure that the matching happens more intelligently. And what's really interesting when I mention these verticals is the consolidation of them. So whereas before you had lending for consumers, lending for small businesses, payments, you have now what we call challenger banks or neobanks. We have one in Brazil called Neon, another one we just did in Mexico called Clar. And basically it's consolidating all these different types of fintech innovations so that a consumer basically is having a digital experience. You mentioned the millennial who, here in Washington, D.C., if you pay your rent, you're going to use Venmo. You're not going to write a check the way I did when I moved here. So there are even tools, traditional tools that aren't used anymore. And I think the consolidation of that is where we see a lot of future going as well.
Which is so important. We're nearing the end of our time. I wanted to briefly, I'm not sure we'll get a chance to get to everyone, but there's been so much conversation about all of these innovations are fantastic, but if people aren't using them and if they're not expanding their well-being, then it's pointless. It's not fitting into the inclusive. Ashraf, there's been progress made, but how do we reach the next billion? How do we reach that next generation with impact and meaningful financial inclusion? What does a player like you need from the marketplace?
I will tell you what we are planning to do. I mean, this is what I know at least. For consumers, mobile and convenience is the killer platform, okay? For small businesses, growing the business because of being included is the killer use case. For large corporates, reach out effectively through digital channels is really what we're looking for. So I think when we look at the whole ecosystem and how it is interrelated. Every part of the ecosystem have special interests, and we have really to work on those special interests, and it's working. I mean, I think this is the way to go.
Governor, would you like to, and Andrew, very briefly close us out? What's the priority in terms of expanding?
Our work is focused on two things. On the supply side, our goal is to create a financial services ecosystem that facilitates the delivery of differentiated products catering to the unique needs of the various segments of the population. On the demand side, we aim to empower and educate financial consumers toward maximizing the benefits of their use of the financial products. That's our mandate.
And Andrew?
Yeah, I'll just say we're talking about culture change. I think we as an organization have had to change as well. So we have retooled our own network. We have a Visa developer platform. We have open APIs. We have new teams that are out working with folks like Ashraf. We were back in the room before, and he was saying you guys are moving much faster. We need to continue to move really fast. It's not, Ashraf shouldn't need to learn our business. We need to help him and understand his. Payments is an intensely local business, so a lot of things we do are on the ground in countries each and every day. So I think if you look back 4 or 5 years ago, a lot of the bigger financial institutions weren't really embracing fintechs. We started doing something called Visa Everywhere initiatives, where we were bringing in fintechs or very small companies that had a kernel of an idea. We were working with them. We brought a lot of our traditional clients in as well. We would give them some funding, and then our clients were also seeing they were additive to the system and starting to partner with them. So those models start to work, and you have to just replicate those across markets.
Well, this has been a fantastic conversation. We are at the beginning of this. There's a lot of work to be done, but a lot of enthusiasm. Thank you so much to our panelists. And for anyone of your colleagues who was not able to attend today, this will be on playback on World Bank Live. Thank you all. Big round of applause for them.